Today, the benchmark stock indexes are trying to grasp the opportunity and improve the results of the gloomy third quarter. Wall Street indexes are gaining ground in light of the data on personal spending. Fresh macroeconomic data did not bring either surprise or disappointment. The US stock market got a second wind and the major indexes were able to recover. The Dow Jones climbed by 0.35%, the Nasdaq showed the strongest performance and gained 0.83%. The S&P 500 rose by 0.59%. The New York pre-market promises a further recovery of the stock market. The S&P 500 is expected to trade in the intraday corridor between 4,390 and 4,370 points. Wall Street indexes closed in the green yesterday as investors digested the latest portion of economic data. Besides, yields of the US Treasuries halted the stunning growth. Although Fed Chair Jerome Powell awaited discussion of further policy moves, signals from the colleagues remained ambiguous regarding the chances of another rate hike this year, citing potential disruptions in economic data due to the looming government shutdown. Richmond Fed President Thomas Barkin said he was still uncertain about what the central bank should do concerning monetary policy for the rest of the year. Data on a Thursday showed that the US economy maintained robust GDP rates in the second quarter. In a separate report, the number of initial jobless claims slightly increased last week, and the number of contracts for the purchase of an existing home in August declined more than expected. The drop in yields of the 10-year Treasury bonds to around 4.6% brought a sense of relief. The yield fell just as a heavy week of new government debt selling totaling more than $130 billion come to an end with a straggling auction of 7-year bonds amounting to $37 billion on Thursday. In Washington, the Democrat-led Senate made progress by passing a bipartisan stop-gun funding bill aimed at preventing the fourth partial government shutdown in a decade. This means that Washington has just a few days left to avert the fourth partial government shutdown in a decade if lawmakers cannot agree on the funding levels for the entire fiscal year starting October from 1st. Shutdown can disrupt government services, including the publication of the key US economic data, such as the closely watched employment and inflation reports, potentially introducing confusion and fear into the market. The pre-market on Friday already looked more promising. Investors found in consumer spending data. However, the prospect of a government shutdown still looms over the market and risky assets, which could negatively impact sentiment later today. As for the economic calendar, consumer spending in the United States increased in August, but core inflation slowed down. The annual price growth, excluding food and energy, decelerated to below 4%. Consumer spending, which accounts for more than two-thirds of the US economic output, increased by 0.4% last month. The score matched the consensus. Moreover, the figure for July was upgraded to 0.9%, an uptick higher than the previous 0.8% growth. At the same time, personal income grew by 0.4% in August from a month ago, following a 0.2% growth in July, in line with the market expectations. The US Central Bank monitors PCE indicators to achieve its inflation target of 2%. Last week, the Federal Reserve put interest rates to hold, adopted a more aggressive stance. Since March 2022, the central bank has raised the benchmark rate by 525 basis points to the current 5.5%. The yield of 10-year bond was 4.5% today, about 15 basis points. The US dollar is on the defensive today. The greenback could shrug off selling pressure in the New York pre-market and rebounded from intraday lows. Its index was trading at 105.90 at the time of recording this video, 0.25% down. The index is likely to span the American session within the corridor between 105.70 and 106.20. The US dollar regained its footing today as the PCE price index slowed down in August. Earlier, the greenback was hurt by a number of factors. Inflation in the Eurozone fell lower than expected in September to the weakest level in 2 years. This suggests the conclusion to the ECB policy has proven its efficiency. The Bank of Japan sprang a surprise in the morning. The regulator announced emergency government bond purchases, and the Canadian dollar has also strengthened against its American rival. The USD CAD pair dipped to 1.3467. The intraday carrier for the instrument is seen between 1.3440 and 1.3500. Fresh data today revealed that Canada's economy stalled in July as the manufacturing sector exhibited its target decline in the past 2 years. Analysts had forecasted a growth of 0.1% on a monthly basis. The manufacturing sector contracted by 1.5% compared to June, marking the most significant monthly drop since April 2021, mainly due to the companies reducing their inventories. A strike in the parts of the Pacific province of British Columbia also impacted the chemical manufacturing subsector. Some industries affected by forest fires in June rebounded in July. Meanwhile, Canada's GDP likely inched up by 0.1% in August, according to Statistics of Canada. The crypto market is trading with a mixed sentiment due to the industry news. Bitcoin came under selling pressure. The token slipped by 0.7% in the pre-market to the level of 26,900. The intraday carrier is determined between 26 and 900. If the price goes beyond these borders, it could go to the 28,000. For the news, Security Commission approved the first Ethereum futures of ETF. Today, Valkyria Bitcoin strategy began aiding Ethereum futures contracts making in the first US fund with exposure to both Ethereum and Bitcoin in a one package, said in a company representative. Trading for this ETF will begin on Monday, October 3rd. Meanwhile, the SEC has detailed its decision on a spot Bitcoin ETFs for BlackRock, Invesco, Bitwise, and Valkyria. Make profits with the InstaForex. Watch our videos on the InstaForex TV channel to make well-rounded trading decisions. See you online next week.